Hey fellow investors and fellow stock guardians, it's Thursday, April 8th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a pretty green stock market. I investigated why the Nasdaq rose more than 1%, explored why Twitter investors are excited and what that means for Spotify's future, and wrapped today's episode researching why Nike is still a solid investment despite the recent price drop. The stock market indices finished Thursday in the green. Yesterday, the Fed's officials released their March meetings minutes, and they confirmed their plan to continue to buy different kinds of assets, such as $120 billion a month in bond purchases. The Federal Reserve's officials do not want to take their feet off the pedal until they see a sustained level of inflation and employment at their target. That gave investors confidence that the liquidity is still here to stay, and investors celebrated their newfound confidence by buying themselves some stocks, especially Nasdaq stocks. For the winner stock of the day, let's take a look at Twitter first. The stock was up a few percentages yesterday and up another 3% or so today. It's an interesting upward movement because it is coming after the rumor that the company is acquiring the chat-only social media platform Clubhouse. Or at least that was yesterday's talk of the town. Today's talk of the town is that the deal hasn't gone through and it is off the table, at least for now. Typically, when a company acquires another company, investors don't like the news and send the acquirer's stock down for a few days. Twitter's upward movements despite the acquisition news speak to the market's excitement about Clubhouse and voice-based social media in general. Regardless of whether Twitter buys Clubhouse or not, what this means to us as investors is that voice and voice-based interactions are gaining more momentum. Which company do we know that is leading the voice-based entertainment and content? If you said Spotify, I'm with you. We talked about it a few days ago after we heard about its possible gadget for streaming music and content in your cars. Look up Spotify's stock card. It has stable operations. More importantly, under the cash availability section, you can see the operations generate free cash flow. I'm quite bullish on the future of Spotify. It seems voice is becoming more important in the way we consume content and interact, and Spotify is there to lead the market. For the loser stock of the day, I visited my reopening watch list. If you remember, a few weeks ago, we created this watch list together using the screener tab. We focused on companies with struggling sales that have a lot of cash and positive investor sentiment. The logic was that reopening of stocks are those that have had a bad year due to the pandemic, but the economic recovery has turned the investor sentiment positive towards them. I leave a link in the show notes in case you'd want to copy it. Back to the list, I noticed Nike popped up on the watch list and shares were down more than 2% today. It's intriguing to say at the least. It seems the company settled a lawsuit with a Brooklyn-based designer brand named MSCHF over 2 instances of alteration to its product without permission. The company has also found itself at odds with USPS over its Nike Air Force One USPS shoes. The culture of designer sneakers and collectible sneakers trading may seem quite strange to some of us. However, the market for a sneaker resale is expected to reach more than $30 billion by 2030. There are startups out there that are purely focused on such a market, and Nike is one of the largest brands that play in this space by offering sneaker customizations and limited edition sneakers. If the lawsuit is what is driving the stock price down, I'd say it's a buying opportunity. These won't have any impact on Nike's long-term growth. The brand is a leader in the athletic and athleisure market and making strides in the collectible markets too. Back to the company's stock card, it has strong operations that also pay dividends. Watch that overvalue the stock price, however. Let me add Nike to my crash watch list, and I'll be watching it as a potential addition to 2021 startup portfolio, April's edition. Alright, don't forget to reserve your spot for Friday's meet and greet session using the link in the show notes so that I can share a few tips and tricks about how to use the StockCard platform in your research. On this week's meet and greet session, I'm also going to share a new functionality we will be adding to the platform in a few days. So join us this week. And as always, if you like to give a StockCard a try, research as many stocks as you want, and receive a stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, you know what to do. Subscribe and share with your fellow investors. I'll see you tomorrow.